Yes, students, Assalamu alaikum. We are going to start our class now. It's almost the time is there. So I hope you can hear me now. In the meantime, if still students are joining, so anyone has a question or query, please let me know. If you have any question, anything, just send me a message. Yes, thank you very much. Thank you, Ali Yusuf. Yes, as I told you last time, Talal, that timing we are not going to change any time, right? It is from the management, we have to report. So class timings is as per the schedule. Wednesday's class we cannot change, so there is no point in discussing. We have more than 70 students in this class, so it's difficult. So I'm not going to change anything. Yes, it is recorded. Yes, the class is recorded. Even this one is being recorded now. So all the class are recorded. So you can um, attend anytime. But attendance based on your joining the session. And attendance, as I mentioned last time, attendance automatically recorded based on your joining the session, because system will generate a report automatically. I don't have any control on attendance, so attendance is automatically. Sorry, class schedule is not in my hand. You can discuss the management. So this is what the schedule was given to me, and I'm teaching as per that schedule. Okay, we are going to start our class now. So what I'm going to do is, for the time being, I'm disabling the message, right? So I'll enable the message later on. When you have any question, you can ask me at that time. Thank you very much. Yes, so this is where we stopped last time. About we have, if you remember, last time we said that there are 3 types of business organizations. I'll just go. Yes, this is where we started, that we have 3 types of business organizations. Each of them have their own advantages, disadvantages, and we stopped at corporations, right? Advantages, disadvantages, and we said that if you want to see whether any organization is corporation or not, you can check on Tadawul. So all companies listed on Tadawul are defined as corporations. And this slide, I said there's no need. It is the same thing what we discussed before. But this is how the engineering economic decisions works, right? And now we're going to see engineering economic decisions. Now, what is engineering economic decisions, right? It's all about planning, right? What is planning? Is, for example, you want to start a new factory, you want to increase your profit. So these are all part of planning. For planning, you need investment, the money, right? You have to manufacture whatever you product you want to sell, and then you have to distribute it, marketing, right? And at the end, you'll get a profit. So this is how it works in a real life. Now, engineering economic decisions. Also, this is what we have in your book as well, chapter number 1, right? So this is what we are saying, that what is the role of engineers in a business, right? In any organization, what specific tasks are assigned to engineer, right? Okay, this is what we are going to see. Okay, what specific task? Those tasks could be planning for acquisition of equipment. Acquisition means you need to acquire equipment. You have to make a plan, right? In the beginning, I gave you an example of purchasing a CNC lathe machine or manual lathe machines, right? That is an example of planning for acquisition of equipment. You have to make a plan. Why you need it? What was the reason? This is what you'll be doing. This is a requirement. You have to do it in a real life scenario, right? Now, planning for acquisition of equipment. You will be involved in planning. Why you need to purchase CNC lathe machine? What is the reason? Is it based on a requirement for next 5 year or 10 year? Okay. After that one, you have to participate in a decision making process where okay, what is the required investment? Estimating a required investment. What investment you need, right? What will be the required investment in order to purchase CNC machine or whatever you have decided? Or these are just some example. Or what will be a manufacturing cost? Estimating a manufacturing cost, that if you are going to produce goods X, right? Or if you are going, so what will be the cost? Manufacturing cost. Well, what will be the cost of a material? What will be the cost of a labor used in that product? So these all, you'll be involved in these day-to-day activities. Also, you'll be involved in calculating about forecasting a product demand. Forecasting means estimating what will be the demand of your product, how many units we are going to sell in next month or next year or next quarter, what should be the selling price, and what it will be the life of this product. So these all type of decisions where you will be involved as an engineer. But if you see, there is an important thing in all these decisions. See, first one is planning. For acquisition of planning means it is something you're going to estimate. Estimating a required investment. This is also an estimate. Estimating a manufacturing. Estimating means what will be expected cost, right? Forecasting means estimating how many units we will sell. What will be the selling price? What will be the life? These, if you look at all these things, these 6 items, all of them talk about estimate, predict, we call it predicting the future. So economic decisions basically is all about predicting the future. We are not sure what will be, for example, the cost when we, let's say you introduce a new product, right? And you said that it's going to cost 50 real as an example. Cost means the material use in that one, cost of labors and cost of other things. You said, okay, it's going to cost us 50 reals, right? Now, this is all estimate. What will be a real cost? That will be at the end, right? So in economics or engineering economic decisions, all decisions are based on estimates. How much we are going to sell. For example, the last one, second last. For example, sorry, this one, product demand. How many units we are going to sell? Someone gave the estimate that every month we will sell 1,000 units, right? And based on this, a decision has been made to introduce a new product. Right, again, this was estimate. So you made a decision, and what happened actually is something else, right? So economic decisions are based on estimates, right? This is an important aspect in economic decisions. We'll see it later on as well. Now, in order to understand economic decisions, right, we have our personal economic decisions, right? Now, the way you play a role in using corporate financial assets, right? We are also responsible for managing our own personal financial affairs. It's the same way where you play a role in a corporate financial assets as compared to your own personal affairs. How? I'll explain one by one. For example, if you look at this one, second one, see, in your own personal situation, you have some essential needs, right? We call them non-discretionary needs or essential needs. For example, for your own persons, something what you need is you need housing to stay, you need food, you need clothing, you need transportation, right? These are your essential needs, right? Any money which is available for discretionary expenditures such as entertainment, travel, and investment. Now, I'll explain again this point. Your personal expenses in a month, some are only for your essential needs. If some money is left, then you are going to spend that money on your entertainment, on travel, or something else. But first, we need to spend on our something very essential, right? And then whatever is left after spending on essential needs, you can use it for travel, entertainment, and the last point is investment. You say, no, I'm going to purchase shares of Aramco as an example. This is, I'm talking about your personal situation. Now, if you apply the same rule organization as an engineer and you have corporate assets under your control, you are a manager. So what you are going to do, first you have to pay for your essential needs in a real life scenario in an organization. Maybe you need to pay for employee salaries. These are essential needs. I'm talking about your business. If you are a manager of a company, right? So first you have to pay salaries, you have to pay for your electricity bill, right? So you have to pay to your suppliers for a material you purchase from them, right? So after paying all those expenses, if you have something extra money left, then you think about investment. So it's the same criteria whether you do it for your own personal economic decisions or as an engineer when you'll be working for a corporate financial affairs. But the investment choices, see where you are going to invest. As I said, you may invest, I'm talking about your personal situation. Let's say you decided that you have now extra money left. So you want to invest that money into some businesses, right? You may invest in, let's say, shares. You say, no, I'm going to purchase shares of Aramco or SABIC or some other companies. Or you say, no, I'm going to purchase some land, earth, right? Or I'm going to purchase some apartment for rent so that I can have a rental income, right? Or you can purchase some other businesses. So the investment choices are unlimited, remember, right? The choices you have are unlimited. The same applied for your business situation, whether you can purchase CNC machine or manual lathe machines or anything else. You have so many unlimited choices, right? So investment choices are so many different choices. And then how we are going to choose in your personal scenario, how you are going to choose which share to invest, which building to purchase, right? You'll do some research, right? Which land to purchase, in which city you should purchase a land and which area of that city. So how you're going to choose, right? For your personal or for a business, it's the same thing, right? So the same technique you use for making this type of analysis, right? You do the same thing for your business, for engineering economic decisions. You have to see so many different options and you have to choose. But the best investment strategy, right? Where we manage the risk by diversifying our investment. Diversifying means if you want to make an investment decision, you may invest in, I'm talking about your personal economic decision. You say, no, I have money, so I will invest some of it in stocks, shares, some of it I will purchase gold because I expect gold price to increase, as an example. Some money I will spend in real estate, a car, right? Or I will purchase some rental building, apartment. So there are so many different investment strategies available to you, right? So, but the key point here is diversifying investment. Diversifying means don't put all your eggs in one basket, right? So you have to invest in so many different areas. So this is what we call it investment. So personal economic decisions is that if you have to make an investment choice, right? How you are going to choose, what information you need, right? And the best strategy is to diversify. Now the same rule applies when you work in an organization and you have to make decisions about introducing a new product or creating or improving the quality of the product. So the same applies to your business situation as well. Now, next one, we'll see a main difference between economic decision and design, or sometimes we call it engineering decision. It's the same thing, right? Economic decisions versus design decisions. Actually, it is same thing on your book as well, page number 36. So I just put it important information from there, and in the slide is same. Economic decisions versus design decisions, or we call it engineering decisions, right? Why economic decisions are difficult? This is very important point because the rest of the book, rest of the concept depends on this understanding. Engineering economics, why they are difficult? What is an engineering decisions? For example, what will be the type of material we are going to use this product? So you'll be very sure, right? What will be the strength of that material? What is the maximum load that material can absorb, right? So now this one are very straightforward as an engineer. In design decisions or engineering decisions, as an engineer, you utilize the known physical properties, principles of chemistry and physics and engineering design correlations and engineering judgment to arrive at a workable and optimal design. So in design decisions, if you want to make a decision about a design of a product, you are very sure, you know, what are physical properties of that material, what will be the loads, on technical details. Based on engineering knowledge, you know it. We are not discussing this point. What we are discussing here is an economic decisions, right? So understand the main difference. Engineering decisions based on rules, very clear formulas, principles we can easily find out. Economic decisions, right? What is economic decisions? Now we said that in a previous example that we will, if we purchase CNC lathe machine, our sales will increase by 10%. This is what you convince your manager, that if we purchase CNC lathe machines, our sales will increase by a certain percentage, let's say by 20%, right? So very straightforward, right? So measurement of investment attractiveness is straightforward, right? Very straight, very easy, that 20% sales will be increased if we purchase CNC lathe machine. But how it is calculated, how you calculated this 20% increase in the sales, this information, right? Now this information all required is forecasting, estimating how much will be the product sales, right? What will be the selling price, right? And what will be the different costs for 5 years, 10 years. So these are all estimates. Remember, the information you need to make this decision about investment attractiveness, all are based on estimates, and we don't know what will happen. Our estimate will be wrong, right? Okay, so economic decisions basically they are based on time and uncertainty. These are the two defining aspects of any economic decision. So that's why economic decisions are difficult. You make a decision that your profit will be increased by 20% and you invest, let's say, 10 million reals. When you will know it, when actually at the end of a year you see your actual profit or your actual sales, which might be true, which might not be true, right? So economic decisions are all based on estimates, and time and uncertainty is important aspects. Time means what will be your time frame. You are planning to have our profit increase by 10% in next 5 years. It's a different scenario. In next 10 years is a different scenario. You don't know what will happen in the future. Okay. Now, same thing happen as we said on a small scale. We can have same thing on a large scale engineering projects. Now here we are talking about a large scale projects. Now, for example, Aramco decided to invest 20 million real in development of a gas field in Ruba Khali, as an example, right? So it's a huge project, right? Or you want to build a bridge, for example. If you're in civil engineering, right, you need to plan for a bridge, right? It's a large scale engineering project, right? So in this kind of any ideas, engineers are needed, right? They are called upon in a meeting to translate those ideas, those concepts into reality, right? So for a growth of any firm, right, all engineers need to give new ideas, maybe ideas to reduce cost, ideas to improve quality of the product, ideas to improve the sales, right? So you have to give a constant flow of ideas for new products, right? Then the firms can be competitive, right? Or they can make the existing product better or reduce their cost. Okay, so but for a large scale engineering project, it requires a large sum of investment. It's the same thing. You need investment, right? Just like a small decisions we said before. So even a large project needs a huge sum of investment, maybe in millions of reals, long time to see the financial outcome. You said that you are going to open a new factory in Rasul Khair, for example, right? But and why you are opening that new factory? You said because our profit will be increased by 10%, as an example, that our annual profit will be increased by 10% or 10 million, whatever, right? But when you will see the actual outcome, it takes a long time, and it is very difficult to predict what will be the revenue and what will be the cost. The revenue means when you sell something, it's a sales, right? And what will be your cost? Cost of material, labor, cost of electricity, cost of supplies, right? So these are all costs, right? This is here an example of an idea in a Toyota, right? That they want to produce, Toyota Prius, which is hybrid cars, for example. Now, if someone introduced this idea, if you remember that, let's say if we are today and you are an engineer, you suggest this product. So imagine what is the investment required and the time it takes to get this car into production, right? First of all, you need to justify why we need to have this hybrid cars or greener car. What is special about the design? Is it safe for driving on a rainy day when there is no sun, for example? What will happen? What will be the cost, right? Will there be enough demand, right? What will be the risk in marketing the Prius? Maybe by the time we introduce this product, maybe there are no customer or our competitor already introduced the product. So you have to look at the risk as well. So if you look at here, wherever there is money is involved, right? Anything related to business is an economic decision, and anything which is technical is engineering decision. So these bottom three are economic decisions. Now, what is the impact of those engineering projects? How we will see that our project is successful or not, right? When you see some numbers on financial statements, right? So there are so many different ideas, different projects, right? Whenever someone take a project, right, you have to see how it will impact financial statement of a company. What is a financial statement? The detail we'll see it in second chapter, right? But you have to see the numbers, the actual numbers. Just like when you take a course, you wanted to increase your GPA as an example today, right? So when you will see the result of your decision to take this course, when you have your transcript at the end of the semester. Your transcript is your statement, is your not financial statement, is your academic statement, I can call it, right? So whatever your decision, right, to take a course in a summer, you have to, so you want to see the result of it in academic statement. So you had an expected grade in your mind. Now same thing for engineering projects, right? When we select a project, we'll see their project on effect in on financial statements, right? Now, how it will it be same what we estimated in the beginning, or is it a different? Might be same, might not be same. This is what happened in real life. So engineer basically need to understand, that's why the business environment in which companies decisions are made. What is the environment? Is it an inflation, or now economy is down, or in future there will be new technology? So not only you have to look at engineering side, you have to look at so many other aspects. And this is the purpose you are taking this course, to broaden your vision. You have to look beyond engineering, right? You have to look at a business environment, right? What is happening around in the economy, right? Okay. So that's why it's important for engineer, for any engineering projects, to generate profits. Without profit, no one is going to accept a project, right? Management will not accept. Okay, it must generate a profit as well as overall financial position, right? So it must only, in case of your academic statement, your summer course not only increase your performance, it must increase your overall CGPA. In other words, your overall CGPA must be increased, right? Okay, so not only a good grade, but overall it must increase your GPA. We call it CGPA, right? So same thing for engineering projects. When you are accepting a project, right, not only profit, but it must improve your overall financial position. And how do we measure this success? We need some numbers, right? Just like how do you measure your success in this course? You need some numbers. You need a grade, or a GPA is a number, right? So whether we, let's say in case of Prius, whether enough Prius models were sold, right? Whether it was a successful or it was a major source of profit for them. So regardless of any business, all companies need to produce financial statements. Just like for you as a student, you have your academic statement. For a business, they need to produce financial statements at end of each operating cycle, normally a year. Let's say your academic statement is normally at the end of a semester, right? Now, for a business, these financial statements provide the basis for future investment analysis. You will see it based on your financial statement, based on number, that what we said before when we started a Prius, right? And once the project is launched, it is approved, now it's running. Whether we achieved our objective or not, whether we increased our profit by 20%, right? So this you will know it from your financial statement. Then you will see about your future investment analysis, what to do it. If it's a right decision, you go in the right direction, or we need to take a corrective actions. So this is the income statement I've shown you before. This is an example of a financial statement, right? Again, I will discuss the detail of it in a next chapter, right? Now, what is the profit of SABIC in 2013? The last item here, you can see in terms, it is around 25 millions, right? Okay, it's basically not millions, but I'm just taking these numbers. These are in billions, but we are not discussing these numbers now, right? Now, if you look at the numbers here at the bottom, whatever it is, right? Now, this number is the last number here, net income or net profit, is a result of different decisions and different projects taken by engineers in SABIC, right? Now, if you don't imagine, if you don't have this number, how you will know whether those decisions were success or not? We don't know. Without numbers, without financial statement, without academic statement, you don't know what is your GPA, your performance. If there is no GPA, you don't know your performance, whether you achieve, you're doing good or not. Same thing for a business. Without financial statement, you don't know the outcome of your decisions. So that's why financial statements are important. So that's why you have to understand the financial statements, the business environment. This is the reason, again, you are taking this course, to look at a big picture. I'm going to stop here for a few minutes in case you have any question on previous slides. So I'm going to open a message here, and an audio as well, so you can ask a question or you can type it, anyone. If you have any question on the previous slides, before this one here, these slides, if you have any question on these slides, please feel free to ask me a question.
Teacher, the time for the lectures just changed today. So
Again,
do you mark us absent or like late?
No, which time?
It should start at 7 and it starts at 6, teacher.
Lala, it was announced last week. It was changed last week. After from I think on Thursday it was changed. Later at the end it was changed. Anyhow, this one, yes, it was changed. It was clear to anyone. So I updated. It was so better to check your schedule there. Yes. Any other? Yes, please. Any other question? Hello.
No, thanks, teacher.
Okay, welcome.
Doctor, can we stop for 5 minutes for prayer?
Not now. After 10 minutes, I'm just. I'll give you a time. Yes, I think we still we have a time. It's now. Yes. I'll give you a time. Don't worry.
Okay, thank you, Doctor.
Yes, after a few minutes we'll stop. Yes. Salim, your question: what is more important, cost or engineering properties? Both are important. Engineering properties is one aspect, but cost is important as well. Imagine you have a very good engineering project, but cost is very high, or the product which is very expensive and there is no one to buy, right? So both are important. Cost and engineering projects, both are important. As an engineer, you need to have a big picture. This is the purpose. Yes, any other question? Okay, I'll move to next slides. We just are left with 4 or 5 slides, and then we'll finish. and then we'll take a break, and you can pray. Okay, we'll take a prayer break. So I'm going to disable now your messages now. Okay, now there are common types of economic decisions which are made by engineers. What are they? Equipment and process selection. This is a one type of decisions where you have to make once you join any organization. Maybe your equipment selection means which CNC machine to select, right? Out of so many different types. And equipment and process selection, right? Not only, again, you don't have to look at an engineering properties, you have to look at the cost, right? Maybe you select a best machine, but there is not enough money available in a company, right? Or you have to replace an existing material or existing equipment, or you have to develop a totally new product. This is your job to make a decision. Or you expand existing product by introducing a new model. Product expansion means you introduce a new model into existing product. Or even if you don't involve in any three, maybe your job is to reduce the cost, right? You'll be making the decision about reducing the cost. Cost reduction is one. Or maybe you have to improve the service, after sales service only. Customer care you have to improve, right? So these are common types of decisions which you will be making when you join any organization, right? And this is an important slide, the last one here. Basic principle of engineering. First principle in economics, it says a nearby dollar is worth more than a distant dollar. What, in other words, what you receive today is worth more than what you are going to receive in the future. Right? This is what we are going to see in chapter number 3, 4, and 5, the time value of money, based on principle 1. Okay, I can give you an example about principle 1. When you purchase a car, see, when you pay a cash price and when you purchase a car on installment, the price is totally different. Maybe the cash price is 50,000, but the same thing, the same car, when you purchase on 3-year installment, price may be 100,000. So why there is a difference? So basically it tells you that receiving 100,000 in 3 years is same as receiving 50,000 as of today, right? So this principle, we'll see more detail later on as well, but this is a basic idea. Second principle, what it says that what is important, all its count means what is important is the difference among alternatives. If you want to decide, you have to see what is, this is all about decision making. Remember, I'm talking about decisions. What is important is difference among alternatives. I'll explain this principle too on the next slide with some one example. Marginal revenue must exceed a marginal cost. Marginal revenue means by producing one extra unit, right? What is the additional cost, right? That additional revenue must be more than the additional cost. Again, I will explain as well on next slide with one example. And additional risk is not taken without any expected additional return. Okay, we'll see these 4 principles. I'll explain as well. Now, first principle, as we said, that what we receive today is worth more than a distant dollar. So 50,000 as a cash price for a car. Imagine you are selling a car, right? So 50,000 taking a cash or 100,000 taking in installment in 3 years is the same thing. This is what this principle says. Second principle, what it count is a difference among alternatives. To understand this one, I'll give you one example. Imagine here you want to buy a car or a machine to be used on a business. You have one option. Buy means you purchase it, you own it, you have your own malkiya, ownership. Or you can lease it, means you can take it on rent, ijar, right? So you have two options. You buy or you take it on rent. If you buy it, these are the information. If you just look at the first row here, you will be spending monthly fuel cost on benzene is 960, maintenance is 550, but initial cash outlay means the cash advance, muqaddam, in the time of purchase you pay 6,500. Your monthly payment will be 350. You are purchasing something on installment here, and salvage value at the end of year 3. Salvage value means that a value of car which you buy today, after 3 years you can sell it for 9,000 in haraj as an example, right? So these are the information available. But if you rent a car or rent an equipment, right, it could be anything, right? Lease means ijar, rent. Your fuel cost is same, your maintenance cost is same. These information are given, but you have to pay initial cost 2,400, monthly payment are 550, and at the end you'll have a zero salvage value because you don't own it. You have to return it to the owner from where you rented it, right? Now based on this information you have to make a decision. Now what is important in making a decision is not to look at these numbers, is fuel cost and maintenance cost. Why not to look at it? Because they are not relevant. They are of course you have decision making, two choices, they are irrelevant. Fuel cost is same, maintenance cost is same, so it's irrelevant in making decision. What is relevant is these three numbers: cash outlay, monthly payment, salvage value. Now it depends on your situation. Do you have enough cash in your pocket? What is the purpose? So in order to make a decision between buy and lease, you have to look at these last three columns and decide. This is what we call it. What is important is difference between choices. The first two columns are same, so they are not important in decision making. What is important is the alternatives. This is more detail, more practice. You will have it, I think, in chapter number 8. We talk about these type of decision making. Next one, principle 3, marginal revenue must exceed a marginal cost. What do we mean by marginal revenue? Marginal revenue, for example, if you exceed a production capacity by only one, there is a production capacity or there is a capacity of a class section, for example, that let's say there are 50 students in one class, and if you add one more student you have to open a new section, as an example. And imagine for someone in the college who are making a decisions about whether to open a new section or not, right? They will see that by adding one more student, what is the additional cost of a teacher, cost of room, for example. So those benefits or those revenues must be more than the cost. So your marginal revenue means producing one additional unit must exceed the cost, right? Your marginal cost, right? You have a production capacity of certain units and there is a special order from a customer, right? So will that extra revenue is more than the extra cost, then it's okay, you should go it. This is a very basic principle. Marginal revenue must exceed a marginal cost, right? Again, more details with questions, you'll have it in chapter 8, more explanation. This is just a very basic principle. Last principle, additional risk is not taken without expected additional return. What do you mean by this? let's say we said that Aramco is going to open a new gas field in Russell Khair, as an example. They're taking a new risk by opening a new factory. Why? Because they expect a benefit, additional return. It must be more than what you are expecting from your current investment. Let's say your current profit return is 5%, as an example. But if you are investing something in a new project, you want at least to earn something more than 5%. You're taking an additional risk, right? So you must have an additional extra return. The example here, if you look at here, we have a saving account with the cash account with the bank, let's say as an example, and bank gives a return, right? A rate of return or profit rate on our investment. So with bank, we know that if we invest, it's very secure. They will give us what they are saying. So there is a very low risk. I'm going at a last item here, which is shares, stocks. Another one is share. You purchase a share of Aramco, right? And you expect that price it will be increased, instead of 32 it will be 64, right? So you expect price to increase. This is the reason you purchase. So what is the risk here in stock? Very high, right? So you expect a very high return, right? If Aramco shares, if you expect Aramco shares will be increased by only 1 real, then it is not a good idea to invest in Aramco's risky share. Is better to invest in a bank profit rate, right? Because that is for sure. So if you are taking a high risk, right, you must get, or you must expect to get a very high profit. If you increase your risk, your profit or your return must be increased. So don't take in a business high risk without expecting a high return. This is our final point. This is the final principle. So now I'm going to take a break for 15 minutes. After 15 minutes, we'll be back. And if you have any questions, then you can ask me a question. So we are taking a break, and you can pray. Those who want to pray, they can pray. And we'll start a class at after 15 minutes on 7 o'clock. Okay, thank you very much. Yes, welcome, students. Yes, Faisal, can you hear now? Is it okay? Yes, for joining the session. Actually, now in the middle of the class, some students sent me messages. As I told you before, please join the class at least 15 minutes, 20 minutes. It's just a matter of clicking, so that if you have any issue, you should let me know before. And like in this case, I received the messages at 6:30 at those different times. It's not possible for me to answer in the middle of a class. So always try to join the session before, so that if there is any problem, you'll be able to resolve it. Okay. So joining at the last moment is not a good idea. Okay. So is there any question? No, class time is already changed from the management. Okay. So it's your responsibility to check the class times, check Blackboard for notification. So it's very important. Anyhow, it was changed. So I updated on the Blackboard. It was there. I updated the session. Yes. Anyhow, I'll continue. So anyone has any issue with this slides? Yes. Okay. So now we'll move actually to chapter number 2. So I'm going to start chapter number 2 now. Chapter number 1, actually we have only theories. There is no problems, but on chapter 2 and next chapters we'll have questions and problems to be solved. Yes, actually I'm just uploading chapter 2. It's just taking a few minutes. Just wait for a minute, and yes, it's done. Okay. Yes, it is clear now. Chapter number 2, the slide is there. Okay. Okay, now we are moving to chapter number 2 now. Chapter number 2 is about accounting and financial decisions. What is accounting? Do you have any idea about accounting? Of course not, because it's not your major. So we'll discuss a little bit about accounting, what is an accounting, how it works. And yes, Ahmed, it's calculating, yes. Now, calculating is counting. Actually, even that one is not accounting. Accounting is accountability, muhasaba, right? Muhasaba is, if you translate into Arabic, it is muhasaba means you are answerable to someone, right? Now, accounting and financial decisions, chapter number 2, right? In this chapter, we'll see what is a financial statements, because financial statements are prepared from accounting, and we'll see different types of financial statement, which is balance sheet, income statement, and cash flow statements. This is in front of you is an example of Apple computer or Safco. I just put 2 as an example. Now, if you remember in the previous chapter, we said that you have an unlimited choices for investment. You can invest in real estate, a car. You can invest in rental properties, right? You can invest in gold, or you can invest in purchasing shares, as an example, right? So let's say we selected this choice that we want to purchase a share of Safco or shares of Apple, right? So we have money to invest in a market, right? And this is the information given. Safco, which is it's trading at 79 reals on this date. That was just few days ago. This was the price. So what kind of information do you need in making decisions? So now I'll ask a question to some of you. You can send me this answer. I just want to make sure your participation, right? So you can write me a message. I'll ask us few one. Yes, Abdullah Al Ali. Can you listen me? Abdullah Al Ali. Yes, Abdullah, are you there? Maybe he's not there. Okay, Ali Yusuf. Ali Yusuf Al Gargoush. Yes, forgive me for any pronunciation mistake. Yes, Ali Yusuf. Ali, if you need to invest in Safco, so what kind of information do you need? If you want, you can use your mic or you can type for answering. It's up to you, the way you answer. Yes, Ali. If you want to invest, just from your own information, you want to invest, you want to purchase a share of Safco. So what information? Okay, information about the product they want to produce. Let's say it is fertilizer. They are producing fertilizer. Is it enough? See, give me a practical, answer. Imagine you have a money in your pocket and you need to purchase this one. Okay, maybe you need to purchase 50 shares, right, or 100 shares. So what information you need? Abdurrahman Al-Harafi. Abdurrahman Harafi, are you there? Abdurrahman Al-Harafi. Yes, Abdurrahman. Let's say you want to invest it, so what information do you need? Again, it's up to you to type, or you can talk to me. It's up to you. Yes, Abdurrahman, I'm waiting for your answer. Are you typing, or you're going to talk to me? Okay, I'll go to next one. Okay, yes, Abdurrahman, I got your answer. Okay, Firas Al-Amri. Firas Al-Amri, are you there? Firas, yes. Again, it's very important that you should be in. You are joining a session, so you should be attending the classes. Yes. Okay, no answer from Firas. Badr Al-Ghahtani, can you answer? Yes, Firas. What is your answer? Sorry. Yes, Firas. What information do you need if you want to decide? You want to decide whether to invest in Safco, right? So, what information you need? Okay, no problem. Yes. Yes, Jasim. Jasim Al Gagouch. Jasim, are you there? Yes, Jasim. What information do you need if you have to invest in shares of Safco? Yes, Jasim. Any answer? Anyone else can share their point of view? Yes, other than Jasim, anyone? Yes, Saleh. Old stats, okay. Badr about financial status, okay. Abdullah Al-Ammari, a report on company's sales at least for last 6 months. Income, outcome, profit, okay. Yes, Faisal, yes, yes, Faisal said price of share, right? Earnings, price of share, previous experience of other investors, yes. What are their assets, revenues, income, debt? Okay. Yes. See, it depends on our investment. So now I'm going to disable the message and I'm going to explain. Okay. Okay, enough. Yes. See, first of all, understand if I'm just looking for 100 shares, maybe my information requirement is less. I'm or purchasing 10 shares or 50 or 100. Now me is it is people are purchasing in batches of 100, which is not that much amount, right? Maybe it's 7,900, let's say, for 100 shares. What will be looking for is only what is the price last week, anything, or we'll just look at some graph. What was the the trend in last 1 month, and what do we expect? Or we may ask some of our friends or those who have previous experience, right? This, right? But if you are investing millions of reals, remember, right? There are people who are investing, millions. Then, as I said, as Ahmed said, that we are looking for assets, revenue, income, and debt. And Salim, as you said, that old statistics, profits of the company, their financial status, as said by Badr. Abdullah Al-Ammari, he said that report on company sales for last 6 months, right? And incomes and outcomes, profit and loss, right? Price per share, as Thamir said, that income and outcome of the company. Yes, Jasim, you said earnings are important. Ahmed, you said assets, revenues, right? So there are a lot of information, right? Situation of the company, as Ali Abdullah said, that we need percentage, income, outcome. So there are a lot of information, right? The important point here is we need information, right? What we need is we need some information in terms of numbers, right? Whether it's a price per share, whether it is profit, you need numbers, right? Similarly, as a company want to hire you as an employee, maybe they are looking for your GPA as well, that number, GPA is a number, a quantitative number which tells about the performance. Same thing for a SAFCO. You need the information based on some numbers, right? For example, these are the information. It depends, as I said before, depends the amount of money you want to invest, right? And how long you want to invest, right? Then you are looking for so many information. These are some information. Does the company have a consumer monopoly or a strong brand name? What is this company, right? Is it a strong brand name, or is it a monopoly, is the only one? In case of Aramco, let's say it's the only one. They have a monopoly, right? The one company. Okay, so that's a one plus point. Or does the company have high operational cost and low expenditure, or their investment is low? See, it depends on need, information need. That's what I said. Maybe for purchasing 100 shares, I might not be interested in this information. But what about those who are investing millions of reals, right? They might be interested in all these numbers, right? What are their earnings? Is it growth, upward growth in their profits from last 4 or 5 years, or they have flat, means, constant or same income? There is no growth in the income, for example, right? Or do they have consistent high return on investment, or it's, flat? How do they reinvest earnings and profits from these investments? Does they reinvest to increase the share price, for example? How about the amount of debt, loans they have, and their own money, equity? What is debt to equity ratio? We'll see it later, right? What is the earning, or another name for earning is a profit? Whether their profit is low or high, or if they have loan, can they repay their loan, or they will be defaulted, for example, right? So there are so many information. As I said, do they have ability of a company to adjust if there is an inflation in a country, right? Do they have enough earnings to grow, to increase? So there are a lot of information, right? So here in front of you, I just put one graph which is available on the Dawal website. I just copied it. You can see the fluctuation. This is a fluctuation in a share price for the last 6 months. Right. This information, remember, you can, when you click on 6 month or 1 month or 1 year, 5 year, you can get different graphs. It's very easy, right? So this is how the share price, there is a variation, right? From 75, sometimes it went down to 55 if you look at here in around Shawwal 1441, it was around between 55 and 60. This was the price, but again it increased, and price maybe now is 79, right? Now, as an engineer, understand, now I'm coming to our theoretical things. As an financial manager, or as a manager or as a planner, objective of SAFCO, what should be the objective of SAFCO? Who's going to tell me what is the objective of SAFCO? Let's say if you are an employee of SAFCO, right? You are a president of SAFCO, you are an engineer, right? So what is your objective? Who can tell me? I'm going to enable the message. Yes, now messages are enabled, right? So Salim Alisa. Salim, are you there? Yes, Salim. If imagine you are a president of SAFCO, right? So what should be your objective? Yes, to improve the sales. Okay. What will happen if you improve the sales? Improving sales means you sell more and more, right? I can sell more and more. For example, I can give you a very small example. Let's say I give a discount of 40%. My sales will improve, right? Yes. Increase the profit. Okay. Yes, now it is good. To increase a profit. How much to increase a profit? If you increase a profit by 10 real, it's also increase, right? Is it a good that you increase a profit of 100 real as an example? This is your objective? Of course, no. Yes. See, you have to be specific. Increasing the profit means you increase, maybe 1 real is also an increase from the last year, or 100 real from last year is also an increase. Okay, you said it must be reasonable. Maybe the correct word should be, anyone can share other word for this one, for profit. What should be the objective? Can someone share? Valuable profit. Still, it's very vague. It's not clear. Increase profit percentage. Okay, more than cost. Still, 1 real is more than cost. Increase net income. No, see the correct word. I'm not getting. Keep the growth. Okay, Ahmed Adil, you said that, what should be the profit? What should be the objective if you are a president? What should be the profit? Objective for profit. Increasing. Acceptable. See, the correct word should be maximize the profit, right? No, you have to maximize the profit, right? Increasing the profit is just increasing, right? Always companies or managers try to maximize the profit. As a result of maximizing the profit, right? If you have a maximum profit, your share price will increase, right? If share price will increase, then value of SAFCO will increase, the market value of SAFCO. How market value of Safco will increase? When their share prices increase. Instead of 79, let's say it is 100 real, right? If you increase the share price to 100, what will happen to a market value of Safco? It will increase, right? Why we need a market value? Yusuf Al-Haddad, can you tell me why we need a market value? Yusuf Haddad, are you there? Yes, maximizing means increasing from the previous year. Yes, Yusuf. Why we need to have a market value? Yes, Yusuf. Why we need to have a market value? Or in other words, why you need to have a market value of your car, for example. You know, if market value means when you go to Haraj and you sell your car, you need to have some value, right? Some cars have a less price, some cars have a high price, right? When you go and sell. Okay. Okay, I'm continuing. See, what we need to do, what I'm trying to explain here, that objective of a firm is to increase their market value. And what is a market value? Market value is share price, right? Price in the stock market, price in the Dow, right? How it will be maximized? When you have a maximum profit, profit is maximized, right? And increase in profit will result in increase in share price. And how do we calculate a market value of a firm? Basically total number of shares multiply by the market price. So if you look at a Safco's price, market value, it is 32 billion Saudi Riyal approximately, right? This is the value of Safco, right? If someone want to see the value of, yes, Badr, you are right, to provide the fair assessment, right? Yeah, right. So market value, how do we calculate a market value? Because you'll see questions like this one. How do we calculate a market value? Share price multiplied by total number of shares. So you can see this is a market value of Safco. Now you can compare Safco with Aramco, for example, or any other companies in the world. It will give you their value. If someone want to purchase Safco, it give you an idea, okay, that at least they have to pay 32 billions, right? This is what the owner think the value of their company. If someone want to purchase Safco, the whole company, imagine, so they must pay 32 billion or more, depend on our agreement, right? So basically share price or the market value will be known from the numbers, from the information, right? So these information, right, reflects what is profit. And how do we calculate profit? I'll show you here, right? Part of a profit will be distributed. This is what the other information we have. Yes, now clear. Market value times price of share. Okay. Now the other information about Safco or their dividends, for example, which is mentioned here. What is a dividend? Is 1 real or 0.75 halalas or 3 reals in 2015. 16 it was 1.5 real. It was 1. So you know what is a dividend? Yes, dividend is basically part of a profit given to owners. See, at the end, Safco has profit. Now, this profit, you have a choice either to reinvest in a business or give it to owner as a dividend, right? Whenever you have profit, I'll explain again. profit will be divided either to be reinvested or to be given to owners as a dividend. This is what every corporations are doing, right? Okay. Now, as we said, objective of the company is to increase the market value of the company, right? This is what we are saying on slide number 9. What is the objective of the company? To increase the market value of the company. What is the market value? We already discussed, right? Okay. Safco's market value is 32 billion, which I've shown you in a previous slide. As an example, Aramco values at this price of a share is 6.5 trillion reals, right? Or in terms of dollars, it is this one. So this is what, if as an example, if someone want to purchase Aramco, they must pay, let's say, in as of this date, they must pay this or more, whatever your bargaining on more than this. Of course, no one will sell at this price. If someone wants to purchase in a business, they have to give more than this, right? So this is how it works, right? The market value. Or in our book, we have some other market value of some of the US firms, Google, GE, Coca-Cola, Walmart. So the same method. The important point here in this slide is how to calculate a market value, right? And we know how to calculate. This is an important point. Now, what are the factors that affect the market value, right? Now, market value or stock price. When we say market value, now understand it is same as stock price. It shows here how a company is doing at a particular time. Let's say during tough time, how this company performed, or during a good time, how did they perform, right? What has happened to other competitors if they have, how much they are doing, right? What about their profitability? Let's say ExxonMobil, Shell. In case of Aramco, I'm just giving an example. Imagine you are an international investor and you have to choose. So you have to compare Shell, ExxonMobil, let's say Aramco, or any other companies you want to see, and see how Aramco is doing in terms of other competitors, for example. So these are all part of market value, right? How do investors expect that the company to perform in the future, right? What are their decisions to invest in different projects, right? Maybe Aramco want to establish a new gas field or new factory or new line of business, different projects, right? So how investor perceive their projects, right? And the actual performance on those projects, right? Maybe if there was a project before and now the result is bad, for example, it did not go well, investor might react negatively, price may go down or price may increase. So these are all factors which affect market value. But again, we are not going into that detail too much for you at this time, just for your information. Now, this is an important point here on slide. What is accounting? Right, remember we were talking about profit, right? I've shown you the financial statement, how financial statements are prepared, what is the language, in which language they are prepared. That is the language, we call it accounting. Accounting is the language of the business, or in other words, in your own personal, your GPA, student GPA, student grades are the language of student performance. Similarly, accounting is also the language of the business. How do you calculate a profit? It is from the accounting. There is an accounting system. We'll not go into the detail and tell you about accounting, how accounting works. No, just give you a very general idea. Okay, so accounting is an information system, just like your SIS system is an information system. Your SIS, right? Your Educate is, or SIS we call it, is an student information system. Similarly, accounting is also an information system that measure the business activities, what is happening, how much we are selling, how much is the cost, how much salaries we are paying. So all these things must be recorded by someone somewhere. Just like your performance, your grades, your marks in quizzes has to be entered into the system, right? has to be captured by someone, right? So accounting is an information system that measures business activities, process the resulting information into reports, and then prepare the reports, right? See, there are so many different teachers entering your marks, your assessment, your quizzes, right? But at the end, all this information is represented on a one or two pieces of paper, right? And that is your academic statement. Same thing in accounting. It's an information system that measures business activities, process, and the resulting information into reports. We prepare different reports. Your transcript is a one report. In financial statement, income statement is a one type of a report, and then communicate those results to the decision makers. And then whoever is the decision maker, they see your transcript or they see the financial statement and see whether we achieved the profit or we did not achieve the profit, right? So this is just a graphical representation of accounting. People make decisions. As an engineer, you make decisions to purchase a material. Of course, when you purchase material, you have to pay money, right? There are so many business transactions, right? And someone has to capture those information. So, right, your decisions, right, result in business transactions. Those business transactions will be captured into a system, right, in an accounting system, which the system prepared reports, and then users, those who made decision, they check the report, what was their decision and what is the result of their decisions, and then they compare those decisions with the result to improve or not to improve, and see what went wrong or what went well, whatever. Okay, then what are the users? It could be business managers, right? Business manager need those information, those reports, right? Financial statements, we call them, right? They can set their objectives or goals based on the results. Just like for you, when you see at the end of a semester your actual transcript, you can see whether your GPA is improving or not improving. If it's not improving, you need to set your goals, right, to improve in the next semester, right? So same thing for a business managers. They also need some reports, financial information, numbers, to set goals. What was the profit, right? How much they need to increase, 5%, 10% from last year. Last year it was 100 million, so this year we need to increase the profit by 10% or by 20%, for example. So increasing the profit of by 20% from last year is setting a goal, right? And also to evaluate the progress, what is happening with our projects, or to evaluate the performance of different managers, and to take corrective actions. Maybe we decide on something and we did not achieve. So we need to take some corrective actions. Business managers will take, or those investors, those who invest in your company, shareholders, or the banks who give you a loan, they also are interested some information. Maybe they're interested whether to give you a loan or not, or invest in your company or not, right? They have to decide whether to provide money for new project as an investor or owners, and what income to expect. But these decisions will be made only when you have some statements, some numbers in front of you. Whether you are a business manager or you are an investor or a bank giving loan, you need some numbers, you need some financial statements. So these are four basic financial statements which are prepared by any business organizations. We call them income statement, statement of retained earnings, statement of cash flows, and balance sheet. What is income statement? Means what is profit, right? What is profit? You know what is a profit? Sales. If I sell something for 100 real, yes, okay, so sale is 100 real minus our cost is 40 real, for example. Yes, more benefits, yes. So income statement tells about the profit, how much profit Safco has made or SABIC has made, right? How much profit, right? So about profit, we'll get this information. Now, the second statement, what company did with the profit? What was the profit last year? 100 million, for example, what they did with that profit. If you want to see how much was reinvested in the business and how much was given to the stockholders as a dividend, right? So this one, if you want to see it for any company, including Aramco, SABIC, you can go to the whole website. This statement will tell you what they did with the profit of 2019, for example. How much was given to owner as a dividend and how much was reinvested. So this statement tells us about this information. Then another important information is the availability of cash. Remember, cash is very important elements in businesses. Without cash, you cannot survive because you have to give salaries to your employees, you have to give payment to your suppliers, and so many things. So that's why statement of cash flows is very important, right? How much cash did the company generate and spend? How much cash you receive? How much you spend? Remember, here there is a difference between profit and cash. Can someone tell me the difference between cash and profit? No, cash, yes. How do we calculate a profit? Profit we can calculate by saying sales minus cost, right? Yes, sales minus cost is a profit. Yeah, no, profit is long term and cash is short term income. Okay. See, profit is sales minus cost. What is sales? When you sell something. I can sell something on credit, means I will get a money later on, right? This is very common in a business. I sell you something, but I don't take a cash. But sales has been made, so my profit is there. But still I don't have cash in my profit, right? So cash is different, right? In a business, normally we don't sell everything on cash. You can sell something and the customer will pay after 1 month or after 3 months, right? So that is profit, not necessarily same. Maybe for a small bokala, when he sell anything on cash or on Panda or those who only deal in cash, their profit, their cash and sales are same. But in a real life, sales is different from cash, right? Yes, profit or surplus, right? So that's why cash is very important. How much cash you have? Selling is something else, sales is different, right? Sales is part of this one, income statement. But cash, the actual amount of cash you have in your bank account, right? That is also very important. So this information is very important for any business and it will be available from this statement. We call it statement of cash flows. Okay. And then the last statement is this one, balance sheet. What is the company's financial position? What do you mean by financial position? How much assets they have. You want to see what is the worth of the building Aramco owns, what is the worth of the plant, what is the worth of their equipment, cars, transportation, so many things. Where is that information? From here in a balance sheet, right? Balance sheet tells us about the assets company has. Also in balance sheet you have loans. If you took any loan from a bank, will be here. Or if you purchase something, you purchase an equipment on credit, means you did not pay cash, will be here as well. And how much is the money invested by the owners, the capital, Ras Al Mal, they are here in balance sheet. These all information will be in a balance sheet. So these are the four main financial statements prepared by any businesses. Okay. Income statement tells us about the profit. Retained earnings, what company did with the profit. If there was a profit, what they did it. how much was reinvested into the business and how much was given to owners as a dividend. How about the availability of cash in the bank? How much cash this company has received, how much they have paid, what is their cash balance from here, and what is their financial position, how much assets they have, how much the loans they have, and what is the capital or the investment by the owners, right? Russell Mal, we call it. These are all here in balance sheets. So these are the 4 basic financial statements prepared by any businesses. We'll not go into detail how to prepare, but just we look at it very general, what is included in these statements. That is what we need to know. So I'm going to stop here in this slide, and if you have any questions, please feel free to ask me, right? You can use a audio, you can ask a question, you can type it. So if there is no question, that then I'm going to end the class. Okay, thank you very much. So I'm going to end a class now, and I'll see you inshallah in the next class, which is on Wednesday in the morning. So of course no one wants to wake up early, but still, you know, including myself, but we have to follow the schedule. So as per schedule, our class will be at 7 o'clock on Wednesday, inshallah. And thank you very much. Best of luck.